Welcome to the Community Improvement Fund podcast. I am Andrew Smith,
I am Davey Smith.
and we are your co founders and co presidents of this organization. First of all, thank you for tuning in. We just want to give a quick update at the top. Today is Thursday, March 30th, and we are currently $1,200 away from adding our second recipient to Chattanooga Basic Income. So that's really exciting. We've got that one person receiving a check. We want to add our second person as soon as possible. So we need money to do that. So we need donations. Davey, do you have anything to say?
Yeah, didn't know where you were going from there. Yeah, so wanted to touch on current plans. Um, we mentioned, wanting to roll it out to more people. We have kind of a nice balance that we're playing here. So you may at home be asking yourself, well, why roll out to someone else if the payment's only $10? I thought you guys wanted a basic income. Don't you need more than $10 for basic income? Fair questions, right? Um, the idea is to grow both ways, basically, like horizontally and vertically. So we want to get more people on board receiving checks. At the same time, we want the dollar amount of the checks to increase. Various approaches we could take to that. We could do, hey, we're going to roll it out to everybody at $10, and we'd have a lot of people on, but they wouldn't be getting a lot of money. It would still be a lot of money for us because sending $10 to that many people is still a lot of money. You could look at the opposite and you could say, hey, we're going to get somebody all the way up to the maximum amount before we onboard anybody else. But again, it takes a lot of money to get someone to that maximum amount monthly payment. And I know, Andrew, you've talked before about the depending on the strategy you take, the amount of money you need to grow changes too. Um, so, for instance, if we have a person on at $200 a month, we would want to bring the second person on at $200 a month. So you have to have enough money in the bank for $200 a month for that second person.
Yeah, so a few important points here. Number one, we always want everybody to be getting the same amount. So that might be obvious. It might not be obvious, but we don't want one person getting $10, somebody else getting 15. Everyone gets bumped up at the same time. So, and we do want the payment to be substantial and a significant amount, but also we need people to notice us before they're going to donate to us, right? So that's kind of
Right.
why we're kind of playing this balance between increasing our payment to make it more impactful and at just touching as many people as we can with the payment, because we want people to kind of get used to us and get used to receiving the checks, because we are kind of a novel concept, and we want people to trust us and have heard our name before. So that's why we're trying to expand. And yeah, like you said, the more that's kind of why we're going to alternate. Our current plan is, so right now we have one person receiving a $10 check. So when we have the funds available, we're going to bump that up to two people receiving that $10 check. And then the next milestone that we hit is going to be bumping both of those two people up to an $11 check. And then it'll be three people getting 11, and then three people getting 12, four people getting 12, four people getting 13, and so on. And like you touched on, like once you have 50 or 60 people onboarded, it becomes a lot harder to bridge that gap. It bumped the payment up for all those people. So we're kind of gonna
Yeah.
gonna take baby steps.
And when we say a lot harder too, I want to call out harder in the sense of more money. Um, Onboarding the first person should always be the hardest because you're a no-name organization. You don't have any money in the bank, right? There are, economies of scale at place here. Once we have a wide net, things get easier. But it is more money. And it would be the same, right? If we onboard 100 people and we want to raise the payout by $1 a month, that's $100 more a month that we have to be able to support, right? So it's it's definitely a line we got to tiptoe. And again, we're doing this sustainably. So we're going to have the money in the bank ready to go before we do anything. We make any moves, right? Bumping up the payment or spreading it out. Um, there are benefits. There are benefits to both, right? Casting a wide net. Lots of people know who we are. It makes it easier to fundraise. People will heard of us. It raises, it just becomes easier to make money the more people know you, right? You're a well-known organization. It's just easier. Um, on the other hand, paying someone a large amount, they can do more with $100 a month than they can with $10 a month, right? So there are trade-offs. I think kind of splitting it right down the middle, like you said, is makes the most sense, right? We can kind of balance out pros and cons of both, and then with enough donations, we can eventually get to the point where it doesn't even matter so much because we're so wide and we're paying out around where we want to be for our maximum payment.
Yeah, and I actually shouldn't have said that it'll be harder once we get there because it's actually going to be easier. Because
Right.
if you think about it, going from one person to two person or one person to two people getting the same check, that's a 100% increase in our distribution and how much money we need. And yeah, going from 100 to 101 is a 1% increase. So, and you have to think about too, because our money is invested, it is an endowment or a pseudo endowment, I guess. It is growing at a healthy rate on average every year. So once we are sufficiently large, we actually will become less and less reliant on incoming donations because our natural rate of growth will allow us to onboard people just from that too. So there really is a tipping point where we will really get going, and that's why we're trying to really push, throwing money into it as early as possible because we're just snowballing and rolling this snowball down a hill, and at some point it's gonna really pick up steam. So we're excited about that,
Yeah, for sure.
and we want to get there as soon as possible because that's when the fun's gonna start is when we actually can do more events and be able to say like, man, we're paying 50 people, like you're the real deal at that point.
Yeah, and you're also making like statistically significant changes, right? Like you
Yeah.
should at that point like you should be seeing all of these ride along effects that we're predicting and we're expecting to happen. Like those should be real at that point. All of a sudden it's like, wow, man, all these people in this one little place are a lot happier than everybody else in the surrounding area. Like, why is that? Why is this little pocket doing so much better than everyone else? And so, excited to get there, excited to see the real impact. I understand, right? I'm not delusional. I understand one person getting $10 a month is not it's not that huge, right? Like we're not making a big bump. We're making a pretty I mean, we're making a difference for that person, but on a community scale, you know, not that big of a bump, but we'll get there. And it's a process. It'll grow. And it's about the journey and not the destination and not the beginning either, right? Or we're in the middle now. We will get there in due time. So completely aware of that for any of those cynics, right, who are looking at us saying like, man, you guys are just slow and you're not like, we get it, right? We'll get there. We will get there. And then once this is rolling, it'll be doing real good in the community, which is the whole point here.
So one milestone that I'm looking forward to hitting is I really want like a news organization, like maybe an online newspaper, or it'd be hard for a TV channel to do it, but I want them to notice us organically via like some secondary path, right? I want them
Right.
to notice something that is a indirect effect of what we're doing. Because like right now it's really hard. I think it's just hard to get people to kind of understand, and I like it's not like they aren't disrespecting us, right? Because I get like you said, I get that we're small, but it's hard for other people to see like the long-term vision and also take it seriously. And I get it because like a lot of people try to do stuff and they never do it, or they're lying or
Right.
they're fraudulent or whatever. So like I probably wouldn't trust a small startup nonprofit either, to be fair to them. But that'll be really fun and give us something to brag about if and when that happens. So yeah, that's really
Yeah,
cool.
and there's a difference in that too, and us reaching out to a news organization, because I mean, we've reached out to like the Chattanooga Times in the past, and smaller newspapers and things like that, just to say, hey, here's what we're doing.
Well, I mean, the Dade County
What's your
Sentinel, the Dade County Sentinel wrote an article about us,
right?
um, and it's archived on their website. Like you can go read it, um, and it was pretty good. And I was talking to that guy at the Chattanooga Times Free Press, and at the time we didn't have our 501c3 number back yet, and so that's why that was on hold. And so I reached out to him when we got it, and then he ghosted me. So I don't even know if he still works there. Maybe we should reach back out to them.
Yeah, yeah. I think it is different though for them to find us, not the other way around.
Yeah.
And to your point, I mean, that should prove we're doing something right, right? If we're making that noticeable of an impact, like that's what I'm really jonesing for. So if we're if we're to that level, then I'll definitely be happy, right? It'll be a very happy day. I will plaster that link all over the website and all over our YouTube page and link to it, right? So um, we'll be super happy if and when we get picked up like that.
Yeah, and I think that moment should also coincide with like more people visiting our website and reading about what we do, and also applying for like the wait list too. Because like
Right.
right now, why people don't really have a good incentive, like as good an incentive as they will in the future. So like when that payment is $50, shoot, I would apply for it. Why not? Free $50.
Yeah, and I'll call out too. I'll take this opportunity to say, go and sign up, right? Like if you live in the Chattanooga area, and you're watching this and you say, even if you're thinking, well, they're still $1,200 away from onboarding the next person, like that person could be you, right? Like if you say, hey, I need the money, like $10, I'll take $10. $10 will help me out. Go sign up. I mean, right now we don't know who the next person is. Like I'll say it right now, I don't know who that next person is going to be. We haven't decided yet, so the race is open, right? If you think you are in need and you want to be that next person, go and sign up and tell us why. And if it's compelling, right, and it makes sense, yeah, you could be the person.
I can sell it even better than that. So so like right now it is an uncompetitive like market for our next recipient, right? So
Right.
there are most likely going to be like five or fewer people that we're choosing from to get this next. And so once what you need to understand is once you're on, all you have to do is get on. And so
Right.
once you're getting that $10 payment, every you're going to get every increase. And so eventually it is going to be multiple $100s a month. And when it is, we are going to have more people. We're going to have way more people applying for it on the website. And there's probably going to be a couple hundred, I would like to think. So your your odds of getting on are way better right now than they ever will be, and you're automatically going to get those increases if we get you on right now. So go on, yeah, go on there and apply because I mean it makes all the sense in the world.
Yeah, I mean, seek us out right before, because right now we're seeking out people, right? Like we're out looking for people who could use it, and we're saying, okay, like we want to put this person on. I mean, if you're interested and you say, hey, that's me, like I could use this, like pretty good chance like we're gonna lean your way when it comes time, because we're just looking for people who are interested in taking part. Um, so yeah, I mean, to your point, right now is the best time to get in. You're in forever. It'll even, hey, even if it was $10 forever, right? Like you wouldn't take $10 a month. I'll take $10 a month, right? You want to give me $10 a month, I'll take it. So yeah, it really there's no downsides too. Like we're not, a lot of places you go sign up and then they sell your email address and they're spam calling you. Like we're not gonna do any of that.
We won't
All we
even
use
send
it
you an email.
Yeah, we're not going to contact you unless we're contacting you about sending you a check every month, and then I assume you're going to be really happy to hear from us. So, you know, we're not doing a newsletter or anything like that. If we got, if we got to the point where we felt like we just had so much to say and we had so many updates that we needed to send a newsletter, we'd let you know too, and it would be definitely an opt-in situation. So you're not giving anything up, right? It's not costing you anything to sign on to this program. You're literally just putting your name on the wait list and giving us a way to get in contact with you if you're the person who gets picked.
Yeah, and so I also think that, so in addition to looking for people that we can send money to, I've been thinking about this. I would also like to bring a few people on as like ambassadors for us, and like people that, and I've been thinking about this for a long time, like high school students that are doing maybe like a senior project or something. Because
Right.
I know we both did a senior project, and a lot of the time it's like raising awareness for a cause and trying to raise a little bit of money. Like that's exactly what we're looking for, because we need exposure and donations right now. Like those are the two things we need. So if anybody like believes in our cause, like likes the way we think about stuff and like likes our vision here, reach out to us. Um, and like, we're not going to ask you to do anything crazy. Just you know, maybe try to help us raise like 50 to $100 if you think that's reasonable. And tell your friends about us. Maybe make a Facebook post or Twitter post about us or something. So if you
Yeah,
want to be,
we'll give you a sticker to put in your laptop, right? We'll give
yeah,
you something
stickers
to
and like
put a brand on it.
we'll get better merch too and get T-shirts and stuff. So and it would
Yeah.
be
Do you
cool.
think
It would be cool.
it'd be worth having like a volunteer sign up page on the website? Because I know right now we have like the donate page and then the signing up for Chattanooga Basic Income. I mean, it would be a very similar form for the volunteer sign up, honestly. So I don't think it'd be a big lift to put it on there. And if that way people wouldn't have to email us and be like, "Hey, can I volunteer?" It gives you an easy way because those forms send an email to us anyways, right? Like that's how we're collecting the information. So I think it'd just be easier, right? Say, "Hey, you want to volunteer?" So something we'll think about. Until then, though, for sure, shoot us an email. Like I said, we're reading all the emails that come in. So if you shoot us something, we're gonna read it and we're not gonna ignore you. So get in contact if you're interested.
Yep, sounds good to me. And that's all I have to say. We're still just raising money, so send us a donation. And that's all I've got to
Yep.
say for our weekly update.
Sure. So, I mean, we mentioned earlier, we're targeting a little bit shorter videos, especially when we're in this virtual format. So, it's going to usually follow the intro update and then current event. So, we're going to keep with that format and see how it works out for us. See how you guys like it. If you love it, comment. If you hate it, comment. Let us know. Right. Um, so, in terms of current events, one of the big things that's been going around right now. Early March, in the U.S., there was a string. I'll call it a string of bank failures. So three big ones, right? So you had Silvergate, you had Silicon Valley Bank, and then you had some other banks that were on the edge. So Credit Suisse, it was getting real dicey, and also a regional bank, First National, I think was the name of it. I'll have to fact check me, but it was also kind of teetering on the edge, and some people rushed in to help calm
I
the ship.
thought so. I was thinking First National, weren't they the ones that ended up buying Silicon Valley?
I I am
I
not
don't
sure.
remember. I don't know.
Yeah, I'm not sure. I just know that it was kind of a scary time for a little bit. These banks are smaller banks. Like let's be perfectly clear, right? At no point was Bank of America on the edge of collapsing, right? Like your big banks, J.P. Morgan and Chase, like all big institutions were doing fine. There wasn't really much of a concern that something like that was going to take a nosedive. Part of the reason why there was no concern was because the Fed swooped in, right? When things were looking real bad for Silicon Valley Bank was kind of the big one, right? They kicked off the scare. Um, the Fed stepped in and said, "Hey, FDI the FDIC insurance covers 250 grand. A lot of these accounts, 99% of them had way more than that they were about to lose." The Fed said, "Hey, you're going to get your money." So that kind of calmed the fears. Um, so that's kind of what happened on a macro level. Um, at a closer level, a lot of people are kind of like wondering, like, well, how did this happen, right? Like, how does a bank just fold? Um, so, are you in the loop on what exactly happened to these banks?
So I mean, I'm aware of the things that would contribute to getting them in trouble, but if you have more details, you can feel free.
Yeah, so I'm going to focus on Silicon Valley Bank because it was the one that made the most news. They are they're a bank who has a lot of startup-y companies. They also have like they weren't like tied up with crypto, but they had a lot of like crypto firms that had money in the banks. And it was kind of a mixed bag of factors to my understanding from reporting. One of them being interest rates are going up. So yeah, banks what banks do, right, in order to stay open and make money, they take the money you have stored in the bank and they move it, right? And they invest it, they loan it out, they do things like that to make money on your money while you don't need it. Because most people are not pulling all their money out of the bank and putting it back in, right? Like you most of the time you're only using a very small amount of your total fund. Um, because of that, the bank doesn't usually hold your entire amount, right? Especially if you're a big business, right? If you're going to a small bank and you got $1 million in there, they might not have your whole million if you go to pull
So
it out.
I'll interject here really quick.
Sure.
So the rate or the percentage of like cash that banks actually have to have on hand, that percentage is set by the Fed. It's one of the tools of monetary policy, but they literally never change it. Like it's an unused tool of monetary policy. So it is 10%, and it has been 10% for decades, and it's probably always going to be 10%. That's just not something that they adjust. So yeah, so banks are only required to keep 10% of their deposits cash on hand, and so the other 90% is what can be loaned out or invested.
Yeah. And so what happened? So due to that, right? They don't have if you're running it again, if you're running a for-profit company, you're trying to maximize your profits. One of the ways banks do that, right, is I'm going to keep as little money as I feel safe doing. So if the minimum is 10%, if you're feeling real brave, you could keep 10%, right, and hope nothing bad happens. Maybe you're a little more conservative and you keep a little more. What happened was they had um, a lot of money that was tied up, right, that they did not have on hand, that was not liquid. And with the interest rates being, interest rates are going up, Fed's trying to stop inflation. So interest rates are going up. It makes it harder for banks to make money when interest rates are high with that kind of thing going on. Um, so that's already happening, right? They're already having to invest a lot of money to make money. They're in kind of a squeeze. I mentioned before, a lot of their companies are like startup-y, right? Like a lot of more, I'm going to say more risky customers than other banks with a general population of depositors. And so what happened was their depositors, got the yips basically and said, "Hey, I don't feel too good about this. I want my money out of the bank." um, Snowball effect, right? So people start pulling money out. That makes the other people nervous, and they say, "Whoa, whoa, whoa! I want my money. Whoa, I want my money." And what you have is a good old fashioned bank run, right? Like you've probably seen the old timey videos during like the Great Depression, like Depression era videos of bank runs where people were standing outside banks and they're like, "I need my money." Where's that? There's like a Christmas movie, right?
I think it's
Where
isn't it
there's
Mary Poppins?
no, it's not
Is it
Mary
not?
Poppins.
I thought
It's
it
like
was.
I think it's
Is it It's a Wonderful Life?
I'm thinking
I've
it's a
seen the
Wonderful
clip, but
Life.
I don't know what movie it is.
It's either It's a Wonderful Life or it's Miracle on 34th Street, and I don't know which one it is, but it's one of those where
The
they're
kid
all
wants
crowded at the
his
bank
like
and they're waving their withdrawal slips and they're like, I want my well that basically happened, right, to Silicon Valley Bank. Everyone showed up and they said, I want my money. And they said, hey, we can't pay you. And
so
that's the point where the Fed stepped in and said, we're seizing your assets, so and we're gonna insure everybody, and then you're gonna get your money, and we will take the time to collect on all these things so that nobody has lost anything. But it was a panicky moment, and if you had money in that bank, especially above the federally insured limit, you were very close to being out of luck on that money.
so let me fill in some gaps here. So one thing I want to touch on is why they weren't able to liquidate enough of their investments to fulfill those deposit requests. And so this all ties back to the macroeconomic environment and the rising interest rates, right? So banks invest a lot in government bonds.
Yeah,
And so government bonds, they range from bills that you have bills, notes, and bonds. And the only difference is the maturity. So you can have a 1 month bill where like it's only tied up for a month, and then you can have up to a 30-year bond. So the way bond prices work are directly tied to interest rates. And so this is a little bit tricky to get your head around at the beginning, but most bonds have like a stated value when they're released, and it's usually $1,000. So if you buy $1,000 that has a 1% stated interest rate on it, and then interest rates go up to 3%, your bond isn't worth very much, and no one wants your bond because they can go get a new government bond for 3%. Why do they want your 1%? So the market is going to correct the price of your bond is going to drop significantly so that the actual yield comes up to meet the market. So it only has a stated interest rate of 1. So you're going to have to sell it at a deep, deep discount to get it up to market level, right? And so that's how bond prices work. Silicon Valley Bank, before interest rates went up, put a ton of money in long-term government bonds. And so that
and I
lever,
want to
yeah.
I want us to jump in to say they did that because they had a boom in money coming in. So
Mm,
they when times were good, a lot of people were putting money into Silicon Valley Bank that they were getting from like venture capitalists, right? And they were pouring money into these businesses, and the businesses were dumping it into Silicon Valley Bank so they could spend it right when they needed it. Silicon Valley Bank said, "Man, we have so much money, we don't know what we're going to do with it, so we're going to stuff it in these bonds to hold it, right? So it's moving, so we're getting something out of it." Um, so that's why they were so heavily in bonds in the first place, and it just blew up on
So
them.
what I don't understand is why they picked the long-term ones. Because okay, so like I said, when interest rates go up, the price of bonds decreases, and it decreases more severely the longer term your bond is. Because if it's only a 6 month bond, you can get out of it in 6 months, and you're going to see your return actualized sooner rather than if it's a 30-year bond. You got to wait 30 years. So that discount that you're going to buy it at has to be even bigger. So because they were in these long-term bonds, which who knows, like the chair of the Federal Reserve, Jerome Powell, said this is a classic example of mismanagement, and
Right.
like they didn't understand interest rate risk, and I mean maybe that's because we haven't had this situation happen in a long time. But I mean, I know, like I went to school for 4 years about economics, and I know about like not that I would have done differently. I'm sure like they're super smart people that run that bank, but what in the world? Like, what are they doing? It was their
Yeah.
fault.
Allegedly, well, from what we know from the reporting. There's no one left at Silicon Valley Bank to sue us, but just to cover our bases, this is allegedly what's happened. That we're recapping what has been reported. I think it is wild though. I mean, it is a it was a scary situation for the market broadly, because a lot of people were like, "Well, is my bank gonna, is my bank gonna go under? Is my local bank about to crash?" And I mean, if everyone in your small town, your city, went to the regional bank and just took the money out all in one day, if you organize a Facebook group or something, your bank would probably panic. All right. So it is a I don't want to say it's like a fragile system, but there are it is you can get yourself into hot water if you're a bank and something like this happens. Luckily, it's been so we've calmed down a bit since then. Everyone was real worried, and now it seems to be okay. Like no more big banks have gone over at time. As of this recording, at least, we've not seen any more dominoes fall. So,
And so, and you
but
mentioned like making a Facebook group and running the bank, right? So that's I've heard that argument from people from the banks is that they say this was kind of a social media frenzy that
yeah,
that drove part of the bank run, which I mean that's super believable, especially in Silicon Valley. Um, but I mean, I don't know.
well, you had some pretty big people tweet out like, "You better go get your money out of the bank," and
Right.
and I mean, yeah, so I use that example because I mean, again, it's kind of it did somewhat happen, right? Like the news spread like wildfire. It was kind of a internet trend gone wrong, right? To say, and I mean, you have to think too. A lot of those people tweeting probably didn't have any information that your normal Joe had. They were probably just throwing hot takes out on the internet. And maybe you're in the comments right now saying I'm throwing hot takes out on the internet. And that's fine. I'll take it. But like, you don't have to be a you don't have to be a financial expert to tweet something like that right out there. If you've got enough followers, they're going to believe it. So
Well,
it's scary. It's scary, right?
I don't understand how they knew about it.
I assume because again, the clientele was very like Silicon Valley, right? Silicon Valley Bank. So I assume it's just like a very techie, trendy group of like circle, right? And then people from that circle, they know their CEO buddies and their investor buddies who had this happen, and they were like, "Hey, you better go, nudge, nudge, wink, wink. You better go get your money out of the bank." And
Yeah,
then it
see, I
just
don't think.
snowballed.
I mean, I know that stuff goes on like that all the time. That's not supposed to, but like, if you're an executive at Silicon Valley Bank, like you can't talk about like, hey, we might not have like, you know, we might not have the liquidity to do this if we had to do it right now. So I don't know. It's interesting.
Yeah, yeah,
Oh,
for
I
sure.
also wanted to say, and I've got 5 minutes on my timer. Is that you too? Okay.
Yep.
Um, I also wanted to say this bank was um, not bailed out like the ones in 2008 were,
Yes.
but they were. The deposit guarantee is different than bailing out the bank, right? Because in 2008 they were like straight up bailed out by the government, um, and it's a big debate on whether they should have been or not. Um, I mean, it's pretty clear that like you don't want to just let the banking system collapse because that's not good for anybody. Um, but a lot of people weren't happy that they kind of got off a little bit scot free when they. Now I know people did go to
Yeah.
jail for it, so it was a different situation this time.
Yeah. In this scenario, they seize the assets, right? So now the government owns those long-term investments, and it's the U.S. government, right? So they just sit and wait for them to cash. So they're not under the same squeeze that the bank was. They said, "Hey, we're gonna pay your people who want their money out. We're gonna cash them out. You guys, if you're an investor in Silicon Valley Bank, you lost it. You're busted, right? You're out. You don't get anything." And then the government will slowly recoup that money back through the assets it sees. Because I mean, Silicon Valley Bank had the money, right? They just couldn't they could get it,
Well,
and
they
if they
had
had
the assets. They
the
didn't
assets,
have cash because
yeah,
they
and
yeah,
in
just to
order to
put a
be able
bow
to
on it,
have,
to have cash, they would have had to convert those bonds. Or they would have to sell their bonds, and they couldn't sell them for $1,000. They could sell them for like $400, and so they didn't have they couldn't have gotten enough to pay their depositors.
yeah, yeah, it's an interesting situation for sure. Um, so I guess we'll cut it off there. We're getting close to time, so I want to make sure we end it promptly, like we said we would. We promised we are going to do shorter. We're going to hold ourselves to that. Um, this is our first remote podcast, so have a little patience with us. Any technical difficulties we might run into during the course of this, we won't know till we take a look at the footage and review it. So please be patient with us. We're going to improve every time we do this. So by the next time, hopefully we'll have any kinks worked out that you may have experienced during this one. Um, yeah, that's all I had. How about you? Any closing remarks?
Closing remarks. The Atlanta Falcons are going to win the NFC South in 2023. So
Atlanta Braves, as of this podcast, are undefeated in this MLB season. A perfect 1-0 record on MLB opening day today. So feeling good.
we
Um,
might hit the trifecta. Are the Hawks eliminated from the playoffs or not?
I don't know. They're not
Is
very
it
good though. They're not
possible?
going to win. The
Is
Hawks.
it
I'll
possible
throw
for the
this out
Hawks,
right here.
Braves, and Falcons all to win this year?
The Hawks are not going to win the NBA championship this season. I will. You can take that to the bank. I will stand by that. All right.
See you
I think
next
that's
week.
it for us. See you next week. Like, subscribe, hit the bell if you want to know when the next one comes out. And thanks for tuning in.
Bye.